It begins with breaking news. A major Boeing aircraft suffers a catastrophic failure during a commercial flight, resulting in a tragic accident. The world reacts instantly. Social media explodes with images, videos, and speculation. Airlines scramble to ground affected models, regulators issue emergency statements, and families of passengers demand answers. In boardrooms and trading floors across the globe, one question dominates: what happens next? Boeing stock is the first to reflect the magnitude of the crisis. Within hours of the accident, shares plunge as investors anticipate lawsuits, regulatory scrutiny, and declining sales. The market reacts not just to the human tragedy, but to the financial implications: revenue loss, potential fines, and damage to Boeing's brand reputation. Analysts downgrade the stock, projecting months or even years of recovery. Pension funds, mutual funds, and institutional investors with heavy exposure to Boeing face sudden declines in portfolio value. Retail investors panic, selling shares en masse, amplifying volatility. The aviation industry reacts in tandem. Airlines that operate Boeing fleets are forced to ground aircraft, conduct inspections, and temporarily suspend routes. Fleet utilization drops, revenue streams are disrupted, and operational costs rise. Flights are canceled or delayed, triggering compensation payments to passengers and logistical headaches. Airlines dependent on Boeing aircraft for long-haul and high-capacity routes are particularly affected, as replacement planes are scarce and alternative aircraft may be incompatible with existing operational needs. Regulators immediately respond. The Federal Aviation Administration, FAA, issues statements confirming investigations, and international aviation authorities follow suit. Groundings of Boeing aircraft extend globally as authorities weigh the possibility of systemic design flaws or manufacturing defects. Certification process is slow, and the backlog of pending deliveries creates a bottleneck that affects both airlines and Boeing suppliers. Regulatory scrutiny intensifies, with inspectors reviewing production lines, engineering documentation, and flight safety procedures. The ripple effect extends to Boeing's supply chain. Component manufacturers, subcontractors, and logistics partners face uncertainty. Factories may halt production as orders are frozen, contracts renegotiated, or deliveries postponed. Suppliers that rely heavily on Boeing's business experience, immediate revenue loss, affecting payrolls, operations, and investment plans. Jobs across manufacturing hubs in the U.S. and abroad are threatened, creating broader economic consequences beyond the immediate aviation sector. Consumer confidence in air travel diminishes. Passengers, shaken by news coverage, may cancel flights or avoid airlines operating Boeing aircraft. Demand for air travel drops, particularly in segments perceived as most at risk, such as long-haul international routes. The tourism industry feels a cascading effect, with hotels, cruise lines, and transportation services experiencing declines in bookings. Travel insurers reassess risk models, potentially raising premiums or restricting coverage. Insurance companies respond swiftly. The accident triggers claims coverage across multiple jurisdictions, including liability for passengers, aircraft damage, and potential environmental impacts. Insurers face a surge in claims payouts and may increase premiums for airlines operating Boeing aircraft. Reinsurance markets are also affected as underwriters reassess the probability of future catastrophic events. These financial pressures exacerbate Boeing's losses and increase overall uncertainty in the industry. Global stock markets reflect investor anxiety. Airlines with significant Boeing fleets see their shares decline, dragging down industry-specific indices. Aerospace and defense companies with overlapping supply chains experience volatility as investors speculate on the broader impact. Financial markets are increasingly interconnected, so investor sentiment in one sector spreads quickly. Wall Street experiences heightened trading volume and rapid price swings as uncertainty dominates risk assessment. The accident prompts a wave of lawsuits. Families of victims, airlines, and business partners file claims, creating potential liabilities in the billions. Legal battles are protracted and public, prolonging negative media attention. Boeing's reputation suffers not just from the accident itself, but from perceived delays or missteps in crisis management. Shareholder confidence declines, and the company may face activist investor pressure to restructure leadership or implement stricter safety protocols. Airline operations face long-term disruption. Grounded aircraft require inspection and repair, delaying schedules and straining fleet management. Replacement aircraft are scarce, forcing airlines to adjust route frequency, reduce capacity, or charter additional planes at higher costs. Airlines may experience revenue shortfalls for quarters, and in severe cases, some regional carriers dependent on Boeing deliveries could face financial instability. The interconnectedness of the aviation industry amplifies these disruptions. The U.S. economy feels measurable effects. Aerospace is a significant contributor to GDP, employment, and exports. Boeing is not only a major employer, but also a critical component of the national supply chain. Manufacturing hubs in states like Washington, South Carolina, and Missouri face operational slowdowns, layoffs, and reduced economic activity. Exports of Boeing aircraft, a key element of trade balance, decline, affecting the U.S.'s position in global commerce. The ripple extends to ancillary industries, including avionics, materials, software, and logistics. International markets respond with similar urgency. Airlines worldwide operating Boeing aircraft implement precautionary measures, grounding planes and conducting inspections. European, Asian, and Latin American stock markets experience volatility as investors assess exposure to aerospace and airline sectors. Governments and aviation authorities coordinate to evaluate safety protocols and reassure the public. International trade negotiations may be affected as confidence in Boeing's production stability is temporarily questioned. Consumer and corporate confidence declines in sectors indirectly related to aviation. Travel-related industries, including hotels, tourism boards, and service providers, experience reduced demand. Investors reassess portfolios with exposure to travel and transportation, potentially triggering broader market fluctuations. The psychological impact on the global economy is significant. Fear and uncertainty often outweigh immediate numerical losses in influencing behavior. Boeing responds with crisis management strategies. Emergency statements, internal investigations, and safety audits are announced. Executives meet with regulators, airlines, and stakeholders to manage public perception. Technical explanations of the accident are scrutinized, and transparency becomes critical to restoring trust. The company invests heavily in addressing safety concerns, from engineering reviews to pilot training programs, aiming to prevent further incidents and stabilize operations. Regulatory reforms are likely. The FAA and international aviation authorities implement more rigorous oversight, stricter certification standards, and additional safety requirements for Boeing aircraft. These measures, while improving safety, increase production costs, delay deliveries, and impact profitability. Airlines must comply with new regulations, often at significant expense, affecting ticket prices and operational planning. The regulatory ripple adds to Boeing's immediate financial and reputational challenges. Investor sentiment in the aerospace sector remains cautious. Analysts reevaluate risk exposure, forecast delayed growth, and adjust earnings projections. Hedge funds and institutional investors may reduce holdings in Boeing, creating additional downward pressure on the stock. Short-selling activity increases, amplifying volatility. Retail investors concerned about safety and financial stability may exit positions, reinforcing market swings. The company's market capitalization experiences significant contraction, potentially impacting broader indices with substantial aerospace weighting. Insurance and liability pressures continue to grow. Legal settlements, claims for compensation, and potential punitive damages create a multi-billion-dollar financial burden. Insurers may impose higher premiums on airlines and aircraft manufacturers, reflecting increased perceived risk. Boeing's cost of capital rises as lenders adjust terms to account for heightened uncertainty. Investor expectations shift, with long-term growth projections tempered by the uncertainty surrounding safety, regulatory compliance, and market confidence. Airline route planning and fleet management are severely affected. Long-haul flights dependent on Boeing aircraft are canceled or delayed. forcing operational reorganization. Airlines consider alternative aircraft procurement, leasing arrangements, or temporary service reductions. Revenue projections are revised downward, and competitive dynamics in the airline industry shift. Airlines with older or mixed fleets face operational advantages over competitors heavily reliant on Boeing, influencing market share distribution. Global supply chains for aviation are disrupted. Subcontractors, parts manufacturers, and material suppliers face production halts or reduced orders. Employment in aerospace-adjacent industries fluctuates as contracts are delayed or canceled. Small and medium-sized suppliers dependent on Boeing's production cycle experience immediate financial strain. Multinational corporations with integrated supply chains adjust forecasts, negotiate new contracts, and reassess risk exposure. The shock propagates far beyond Boeing itself. Public perception and brand reputation are severely impacted. Passengers question Boeing's safety standards, airlines reevaluate fleet compositions, and governments scrutinize certification processes. Restoring trust requires substantial time and resources, including marketing campaigns, safety assurances, and strategic engagement with international regulators. The psychological effect extends beyond aviation, influencing public confidence in large industrial firms, U.S. manufacturing credibility, and technological reliability. Boeing's research and development pipelines are delayed. Projects related to next-generation aircraft, sustainable aviation fuels, autonomous flight systems, and innovative aerospace technologies experience funding reprioritization. Resources are diverted to crisis management, safety reviews, and compliance, reducing investment in innovation. Competing firms may gain an advantage, capturing market share while Boeing addresses reputational and operational setbacks. The long-term trajectory of the company is altered, and U.S. leadership in aviation innovation faces increased competition from international manufacturers. The broader U.S. stock market experiences correlated effects. Aerospace-heavy indices, industrials, and transport stocks decline. ETFs and mutual funds with exposure to aviation experience temporary underperformance. Investor behavior reflects heightened risk aversion, with capital flowing to perceived safe haven sectors. Market analysts revise sector-specific projections, and volatility indexes spike as traders price in uncertainty. Financial markets reflect both the immediate material impact of the accident and the longer-term reputational damage to Boeing. Legal, regulatory, and operational pressures continue for years. Lawsuits, settlements, and regulatory compliance efforts require sustained attention and investment. Boeing implements structural changes in production oversight, engineering review processes, and quality control mechanisms. Leadership may change as accountability is assigned, and the company seeks to reassure stakeholders. The trajectory of growth and innovation is altered, potentially delaying new product launches and affecting competitive positioning in international markets. International aviation relations are affected. Countries with Boeing aircraft in service conduct independent safety assessments. Bilateral aviation agreements, pilot training protocols, and maintenance standards are reviewed. Airlines and governments negotiate compensation, fleet adjustments, and safety guarantees. Aviation alliances may shift their procurement strategies considering alternative manufacturers such as Airbus, Embraer, or emerging aerospace firms. Global competition in commercial aviation intensifies as Boeing addresses reputational and operational challenges. The psychological impact on passengers persists. Fear of flying on Boeing aircraft affects travel behavior for months, influencing airline revenue and route demand. Media coverage amplifies concerns, and airlines implement reassurance programs. Passenger trust must be rebuilt through communication, transparency, and demonstrable safety improvements. Behavioral patterns in air travel evolve, potentially influencing market dynamics and consumer preferences. Over the long term, Boeing implements sweeping operational, engineering, and compliance reforms. Production standards are revised, testing protocols enhanced, and safety culture emphasized. Although recovery is possible, market valuation may take years to return to pre-accident levels. Investor sentiment gradually improves as performance stabilizes, but competitive dynamics have shifted, and international rivals capitalize on temporary disruptions. The U.S. aviation sector, while resilient, bears lasting consequences from a single catastrophic event. Ultimately, a major Boeing accident illustrates the fragility of interconnected systems. Stock markets, corporate operations, global supply chains, airline operations, and regulatory frameworks all experience cascading effects from one failure. The incident serves as a sobering reminder of the importance of safety, oversight, and crisis preparedness. In a highly connected world, the repercussions of one corporate failure are felt far beyond immediate stakeholders, influencing economies, markets, and public perception globally. The story of Boeing's hypothetical major accident is a narrative of economic shock, regulatory scrutiny, investor volatility, and global industry recalibration. It demonstrates how a single catastrophic event can reshape financial markets, operational strategies, and international confidence in one of the most technologically complex industries on the planet.